Okay, in today's tutorial, we're going to talk about a specific trading strategy that's geared towards intraday time frame called the opening range breakout. I'm sure that many of you are familiar with or have heard of at least the opening range breakout, also abbreviated as ORB, O-R-B. Basically what the opening range breakout is it's the idea that the first few minutes in which market opens, the prices that are defined as a high and low for a specific equity are going to act as a pivot support and a pivot resistance. Basically, from that point, once they break out or break down, continuation and momentum will follow. So, to get a little bit more in detail as far as specifically how this specific strategy works, what we're going to take a look here is I got a few tickers on screen and with today's price action. And what we're looking at here is a 5-day, 5-minute chart, and this is just today's action here. We're not looking at the other 4 days. So when we're talking about the opening range breakout, there's a few different time frames that can be utilized in order to determine that opening range. Some traders will use a shorter time frame, which is 15 minutes. Other traders may use a half hour, while other traders may look for an hour as far as the highs that are established within those time frames. I personally like to use 15 minutes. I think that if we're using a longer time frame with the opening range breakout from a day trading perspective, usually if you're looking for a half hour, an hour opening range breakout, then odds are the move has already happened already without you while you're waiting for that breakout to occur. So that's why I like to stick with that 15 minutes. It's usually when you get the biggest oomph when it comes down to momentum in terms of price and whatnot. So let's take a look at what happens here. And so, quickly looking at, I move that Bollinger Band a little bit clearer for everybody. At our first 3 5-minute bars, which establishes the first 15 minutes of market open, and as you can see here, let's break down the lines first, just so we know what we're looking at. This dashed green line that my pointer is currently on is our opening range high, which is going to be the highest point that is established within that first 15-minute time frame. The red line at the very bottom here is our opening range low. It's abbreviated as ORL, which is the lowest point in which price it reaches within that first 15-minute time frame. And then we have this dashed line in the center here, which is our open price, and that's just a good visual reference so that you're able to see visually where price specifically opened at. So let's take a look at what's going on here in terms of price and how this panned out for Google this morning when it comes down to the opening range breakout. So, and I'm going to go back a little bit just so that we can get this to be as realistic as possible. So this is what we're looking at here, and we see our first 15 minutes are then defined, and our opening range low is 655.87, defined within that second 5-minute bar. And our opening range high is 662.90, defined by our first 5-minute bar. So as the day progressed, you see that once this opening range low was defined, that price didn't come back to test it, to back test it again, and we just kept moving back towards that opening price. These are key levels that you want to keep an eye out for when you're trying to trade intraday. That open price is a very key level. Price has a tendency to retrace or back test that level if you're breaking out in a bearish scenario. Generally, they'll sell off, and we'll come back and test this as essentially a pivot. So what we see here is the price is slowly moved towards that opening range high. Okay, and what we then know now at this point is that we're approaching the opening range high, and this is a signal to get prepared for an entry for an opening range breakout trade. So as you can see with this next 5-minute candle, okay, we got the actual breakout here. So if we continue to move forward, you'll see that this opening range breakout offered a bit of continuation before we came down and got the back test here. So one thing from my personal experience that I figure I should point out is that the first breakout above the opening range high doesn't always give you the momentum for full-blown continuation. So normally, if I'm going to go in for a quick scalp on a trade, and I'm going to take the first breakout of the opening range high, or in the case of a breakdown with the opening range low, usually what I'll do is I'll run a pretty tight stop with it, because there is a high likelihood that what we're going to do is we're going to back test that opening range high, and it's then going to act as a support level. Okay, so as you can see here, that's exactly what happened. We came back, we back tested the opening range high, and we got a bit of consolidation here and dip below. But if you notice, this entire time we never lose this opening price. So the key that we'd be looking at here is not losing this opening price, because that losing an opening price would to me be a bit bearish, and it would indicate further downside. So we notice here that we came back and we tested this open price, and we went ahead and we saw another opening range breakout, and that's where we got the real continuation, where we saw the high of day. So let's take a quick glance at some of the other stocks that we saw opening range breakouts with today. Amazon was another one. The opening range high was 540.17. The opening range low was 536, and that was established in that first 5 minutes. And as you can see here, we held the open price until eventually we went ahead and we got the breakout. And once again, just as in the case with Google in the last example, we saw a back test dip below, and then it came back up and held, and then eventually reached our high of day. Another good example would be Apple in this case, where our opening range was defined within the first 15 minutes. Our 5-minute candle, our first 5-minute candle determined our opening range high, and our third 5-minute candle determined our opening range low. And as you can see here, and this is actually a pretty good example, is we already had our opening range low established, which was at 109.14, and you'll notice price popped a bit and hit a little bit of resistance at this open price. And then we came back down and tested this opening range low, and it held. This right here is a $1 million setup, is what I like to refer to it as. Basically meaning that when you enter off of a hold on the opening range low in a bullish, when you're seeing bullish price action occur, these make for incredible trades. They really do. You get that's essentially buying bottoms, and in these instances, generally what your exit targets are going to be scaling out. For your first exit would be around the open price. Second exit would be around the opening range high, because we know that those areas are going to act as resistance from an intraday perspective. So as you can see here, we did get a breakout, but it was what's called a false breakout reversal, abbreviated as FBR, false breakout reversal, meaning that we got the breakout, but it was a false breakout, and we ended up coming back and dipping down. Now, this is one of the reasons why you don't want to trade heavy into an opening range breakout, particularly when it's the first breakout of the opening range for the day, because oftentimes you will get this type of retracement. So you have to use caution. Once again, standard trade management needs to come into play here, utilizing your stops, trailing, scaling into positions, scaling out of positions. But as we can see here, we saw the dip below open price. We ended up retaking that open, and sure enough, opening range breakout. Now, here's the one thing that is kind of interesting specifically about Apple's action here, is that it was a late day opening range breakout. If you notice here, it was around noon, which I'm in Central Time, so so that was about at 1 o'clock in the afternoon Eastern Time. And normally I'm not a big proponent of trading those late day opening range breakouts. I just feel that they don't have as much strength as the early morning opening range breakouts, so I generally treat those with a little bit of extra caution. But as we can see here, we saw a nice continuation, and we were able to hit high of day just above the yesterday high of day price. The high of day price from the previous session, rather. Now, one example that I want to show here, which is what happens when we don't get an opening range breakout and we get stuck within the range. So With price line, as you can see here, we define the opening range low in that first candle, which is around what is this, 1272 and some change. And by the time we got to the third candle, which is at the end of our 15 minutes, we were able to define the high, which was 1287.29. And sure enough, the following candle here, we just slightly dipped above that, and then it just did not manage to get above the opening range high for the rest of the day. So what happens is we get pretty much what is called a chop fest, where the price chops around. There's no real clear direction. We're just stuck in this opening range. So when encountering setups like this and price action that's like that gets stuck in that opening range, and this is, mind you, from an intraday perspective, you generally want to steer clear of trying to take directional trades, because what eventually ends up happening is that it just becomes more frustrating than what it's worth, because the price just is not giving any sort of clear, sound direction, and we kind of just bob around. And particularly when you're trading options, that can do some damage in regards to decay on premium. So as you guys can tell here, Netflix is another great one. We saw, a pretty solid move off of the opening range breakout from the 107.75 area, and took a nice $5 move there. So as you guys can tell, this is a very powerful strategy if used properly. It's not the be-all, end-all in terms of intraday trading. Just because you see opening range breakouts doesn't mean that we're going to see continuation. So you still have to actively manage your trade, and you consider the risk that you're laying on the table in any individual trade. So that covers things for the opening range breakout tutorial. Next one, we're probably going to cover some other types of pivots and support and resistance concepts, and looking forward to trading with you guys. See you soon.